Greetings, guys and gals. Welcome back here. It's JJ from School of Trade. Sidewaysmarkets.com is our blog. Hope you guys had a great 4th of July weekend celebrating independence. Boy, we are right in the meat and potatoes of summertime right now, which means a couple things. Days without news, be very suspicious. The afternoon trading session, be even more suspicious. You know, it's always kind of a double-edged sword of the summertime. You know, summertime is a little bittersweet. We can't wait for the summertime to fly by so we can get back to the regular volume we see in the market. But at the same time, who wants that beautiful weather outside to pass us by? I don't want to go back to winter time and having to stay indoors. We don't want that. So it's always kind of a bittersweet time of the year in the summertime. Bottom line is this, guys, there is no excuses. We can still make just as much money in the summertime, but we got to use our bean, right? We got to make sure that we're not trading too aggressively. We don't want to be too aggressive when we have non-news days, just like today. Had no major news on the counter today. We knew it was going to be one of those days, and that's exactly what we got. So what was the plan today? Well, first, I want to remind you guys that if you go over to our blog, make sure you follow this blog because you've got so many great resources up top here, guys. I'll invite you to come out and see me in November. There's more information there for our 2013 Member Summit. We've got information on day trading computers. Every morning at 7:30 a.m., I do the crude oil squawk and prep with Marty Errico over at Traders Audio. You can learn about day trading patterns, day trading strategies, guys, and we've always got somebody standing by here 24/7 to help you guys out. Don't forget to join the newsletter, and don't forget while you're here, everything that I talk about today in our live trade room, again, there's your newsletter sign-up form right there and some frequently used links on the right-hand side. I want to encourage you guys, though, to check out our free trial. There's a big button right there right there on the homepage. You can't miss it. Check out the free trial, log into your trial course, or if you're a member, log into your beginner, intermediate, or advanced, and I want you to check out the morning newsletter. The morning newsletter, I used to give it away for free on the blog, but now it's for members only, and I'm putting it every morning before 8 a.m. Eastern Time. It's in the trial, beginner, intermediate, and advanced. So now you know you can join our free trial, you can experience everything about our methodology, and don't forget, when you register for the free trial, I'm going to invite you to come out and see me in our open house in the afternoons in our live trade room. All righty. Now, what was the plan today? What were we trading this morning? Well, we really have the pick of the litter, right? To be honest with you, we can trade whatever we want. This methodology is universal. I'll tell you, over 10 years ago, I made the first big mistake of my career. Want to know what it was? The first big mistake of my career was I learned a strategy that only worked on one market. Yeah, I know. You're shaking your head. If you made that same mistake too, I know. It's easy to make that mistake. And it's very easy for a new guru to come online and say, check out this correlation trade for the S&P. It works for about 2 weeks, and then you know how it goes, right into the trash can. So we want to have a methodology, a strategy that I can apply to crude oil, gold, Russell, maybe some euro. I want to be able to apply it to anything. Forex, stocks, futures. I don't care what I'm trading, guys. I just need it to be moving. If it's moving higher or lower, I don't care what I'm trading, right? I'll trade hot air balloons if I need to. This methodology will work because it utilizes the fear and the greed, and it brings in high percentage patterns, a little bit of tape reading, and some high quality risk management, right? Proper risk management. Let's take a look at what we saw in crude today. All right, because you're probably not here for me to talk about our website. Here's what we saw on crude oil this morning. Now, crude oil, we took a couple easy winning trades today on crude. We're probably going to get a few more before we finish here before 2:30 this afternoon. It's only 12 o'clock right now. The first thing we saw today on crude oil, sideways ranges. You can see this 60-minute chart, flat moving averages, no higher highs, no lower lows, right? This morning, we had anticipated this to be a price wedge, right? This morning, we called this a price wedge. And so, once again, this was outlined in our morning newsletter posted before we took our first trade today on crude. So if you're saying right now, Joe, anybody can do this in hindsight, man, anybody can do this in hindsight, you're absolutely right. That's why tomorrow morning, I want you to log in, download a copy of our morning newsletter so you can prove me wrong. I dare you. right? You can see for yourself. Don't take my word for it. We called this hours ahead of time today. So first things first, we saw right away we're expecting a price wedge on Crude this morning. 60-minute chart. This is a great fit for an anchor chart for a new trader, especially somebody who's trading intraday. Now, once we found that chart, then all we had to do was go on to our entry charts. And on our entry charts this morning, we found another very easy example. Now, here was a great example today of how I'm going to use multiple time frames. I'm going to draw a trend line from low to low. And what do we call that? That's a price wedge, right? So here we have a big price wedge. That should look familiar because we just saw that, didn't we? We just found that on that 60-minute chart. So the 60-minute chart told me, hey, you should probably be aware that we're looking at a sideways range. What does a sideways range tell me to do? Buy the lows, sell the highs. Don't fiddle with that middle, right? I want to sell the highs. I want to buy the lows, but this is what Mama says, right? We joke around in our trade room. Mama says, don't fiddle with that middle, right? Never trust a level you don't know very well, right? Always review your trades every day. We always have these little nuances that we like to repeat each day to keep us on track. We knew we were not going to be trading in the middle. We wanted to buy the lows. Now, we used a proprietary Fibonacci calculation that measured from the wedge low up to the wedge high. Remember what it was? Yep, think back. You remember what it was. We call it our trigger zone number 2. And of course, that gave us now 102.44. 102.44. That was the level now that we knew we wanted to be a buyer at the lows. Now you might be saying, but Joe, that's not the lows of the wedge. That's something else, right? Isn't the lows of the wedge, isn't it right there? It is, but remember, I calculate a wedge. I can have two ways of calculating a wedge. One, just the look of it, but the way that I like to calculate a wedge is I like to calculate it with Fibonacci. Now watch what happens as the day progresses. Again, this is at 8 o'clock in the morning at this time right now. Watch what happens as the day progresses now. We're going to move quickly here down into our buy zone that we identified well ahead of time. And see, I always get new students every day that come into the trade room, and the first concern they have is, Joe, will I be able to shadow trade? Will I be able to trade right along with you? Will I know where you're going to get in before you get in, Joe? Will I know where the profit targets are? Will I know where the stop losses are? Because, if I'm learning this, it'd be nice to see you doing it ahead of me so I could just mimic what you're doing. You won't need to do that forever, but for the first 2 weeks, 10 days, absolutely. This was as easy as falling off a horse today, right? It was very easy. We projected ahead of time what the strategy was. Buy the lows, sell the highs, don't fiddle with the middle. We then announced in the trade room before we ever took the trade, we anticipated our buy zone at 102.44. Then all we had to do was wait for price to get into that 102.44. We did a little bit of volume analysis. We read the tape. The buyers were on the tape, so we bought 102.44. Now you might be asking, okay, Joe, that's great. You called a winning trade, but certainly you didn't tell everybody where to take profit. Certainly that's a little bit too tough, right? There's no way that I can tell you ahead of time where to take your money out of the market. Well, let's see. Remember that price wedge we were talking about earlier. I've got another box here that I'm going to use now. Again, I measured from the low to the high to find my entry area. Now I'm going to measure from the low to the high to find my exit area. Watch this 103.20, and that's where we projected. Again, you can see the boxes are sitting right on my screen already. I haven't changed it a bit. Now we know we're going to buy those lows and we're going to take it all the way up to the highs. I'm going to take a profit target halfway up, and you're going to see Very quickly, there we go. Now we've tested the high. Jackpot. We enter long at 102.44. We go all the way up to the highs. Again, this is a combination of the price wedge or the triangle or the flag pattern along with Fibonacci. Very simple stuff. Now what I'm going to do is I'm going to sell short. And we're going to sell short coming down off the highs. Now when we sold short this morning, this was interrupted, right? We were actually interrupted this morning by a news report. The National Weather Center took our profit at the lows of the wedge. But then all of a sudden we find out there's a tropical storm, right? Tropical storm Chantel. If you were listening to Marty Errico and I, right? Marty and I every morning at 7:30 we do that crude oil prep. Marty gave us a heads up about this tropical storm, and that's what led to price jumping higher here, right? And of course, as we speak right now, it's on its way to making new highs in the day. So the tropical storm came out of nowhere to kind of interrupt this process, but boy, what a great day trading crude. Step number one was pretty simple. Find direction, sideways. Step number two, find the price structure, find the levels I'm looking to trade it. Right? We identified 102.44, 103.20. Step number three, find the entry pattern. The entry pattern, I'll teach you guys that in training Monday through Friday in our live trade room. Come out and see me, and I'll teach you how to enter these trades, how to place your profit targets and stops. As you can see here, though, a fantastic day trading a somewhat challenging environment on crude today. Most people think you've got to have trending markets to make money. Tell that to crude today. Excellent job, everybody. Congratulations on the profit you made today. Excellent work, and we'll see you guys same time, same place tomorrow. Don't forget to join the trial, and I'll see you in the trade room this afternoon in the open house. Adios, amigos. Bye-bye for now.